All right, May 28th, market close, market wrap up. I want to discuss the sell-off at the end of the day in the stock market. As far as I can tell, this is once again trade war jitters. That's it. There's not a whole lot behind this. I mean, we have seen this recurring now for the past 6 or 7 months. Okay, starting last November, maybe even October, November, December, and recently once again. A couple of weeks ago when Trump tweeted, "Hey, I'm putting new tariffs on," and we started to see that. Now, there is also a very significant technical reason behind this, and by technical I am not speaking about charts. I'm speaking about monetary conditions, and specifically I'm talking about these bank reserve flows, which I track, and I have the understanding, I mean, nobody else talks about this. It's funny though, just as an aside, if I may, because I tell my subscribers all the time, and we follow the Treasury's account at the Fed. We can track that every single day, where the level is, and that's telling us exactly what is flowing into the banking system or coming out. In a recent note from the Federal Reserve, they talked about the Treasury General Account, and that is the first time I have ever seen them mention that in this regard. So it looks like, I mean, I don't know for sure, but it looks like somebody at the Fed is reading my stuff. In any case, that's just a side point that I wanted to mention. In the period from early March until May 15th, we saw a drawdown in bank reserves of $220 billion. And that coincided with an increase in new bank assets of $208 billion. So you see what's going on here is that when the reserves draw down, banks get additional room, let's call it, on their balance sheets. I shouldn't even say it like that. They need to add new assets, new tier 1 assets. Reserves are tier 1 assets. So when those get drawn down, see, the banks have to meet these stress tests that the Fed puts them through, and they need to hold certain quantities of tier 1 assets, reserves being one such tier 1 asset. But when reserves are drawn down, the banks have to add other tier 1 assets. What are those? Treasury and agency securities. Okay? Big buying. There was 90 billion, within that 208 billion of asset addition, 90 billion of that was securities, and that was largely Treasury and agency securities. I think it was like 75 or 78 billion. So why are treasuries rallying? Why are yields coming down? And by the way, I did not connect the two there, but another story behind today's sell-off is that the yield drop is freaking everybody out that there's going to be an economic slowdown. But the yield drop was technical in the sense that banks had to add tier 1 assets when they had that big drawdown in bank reserves. Now, because we are at the debt ceiling, and I hate to be all over the place on this, but I'm just kind of ad-libbing as I go along here. But because we are on the debt ceiling, reserve management has been affected. Now, if you look at the Treasury's account, before we hit the debt ceiling, the account was very, very stable. You didn't have big fluctuations. Think of your own bank account where you're able to manage your money every week, and you keep a stable balance. But then something happens that affects your ability to manage your balance, and it could be all over the place, right? You could have your income, your salary coming in one week, and then your payments going out the next week, and the volatility goes crazy. It's exactly what happened with with the Treasury's account. And that volatility triggered volatility in bank assets. And when the banks do things, remember, they got 17.3 trillion in assets. So even small adjustments in those assets affect all the markets. This is totally explainable. The one thing I want to say here, and I will go on record to say this, and we will go back and we will look at this video again in 6 months or a year, and I'm telling you that the decline in yields is not a precursor of an economic slowdown. As a matter of fact, you want to go through the numbers? Bank credit at all-time record highs. Loans and leases at all-time record highs. Auto loans have risen for the last 20 weeks in a row and are growing at the fastest pace in over 2 years. Bank deposits, all-time record highs at the highest level in 3.5 years. Growing at the fastest pace in 2 years, that as well. I mean, all of these bank metrics are just blowing up in a positive sense. This is not an indication of economic slowdown. If there was an economic slowdown, you would see all these metrics of bank credit just start to contract. Bank capital just shot up again in the latest data. Everything positive. Real estate loans shot up again in the latest data. Everything positive. So what is this? Once again, I mean, Trump says something. He said it today. He says, we're not ready to make a deal with China. Everybody freaks out. This is 1,000% zombie behavior. And this is just scratching the surface of the insight that I give in the report. Now, I'll go back to the video I made earlier today. This report is not for everybody, but it is, and I hate to use the word unique because that might seem, unique could be like something completely without usefulness, but just different. No. This is the most concise understanding of the monetary system. There are things that I do which give insight that nobody else has. So I'm just saying, that was an explanation of what went on today. And if you think back to earlier this year when we had the inverted yield curve, and it is inverted now at parts of it, and everybody was making those predictions of recession, and I said no, growth was going to be strong. You had a 3.2% GDP print in the first quarter. And you had guys making videos on YouTube. Oh, this is something that we have never seen before. This portends catastrophe. Just wait. No. I told you. Same thing here. Bank metrics exploding, blowing through the roof. Some of these things hitting, most of them hitting all-time highs in nominal terms, but in the growth rates, unbelievable. Bank deposits. The non-government, the private sector is flush with cash. This is the so-called proverbial cash on the sidelines that'll come back into the market. All this stuff is just, once again, panic, fear. Trump says something, everybody reacts. Every time you have followed that, it has been the wrong move. And this time will prove no different whatsoever. Bye.